All right, let's take a look at these markets real quick. Let's bring them in. Let's go with corn. 2.75 cents lower now, 4.62 even. We bounced about 2 cents off the low of the day. Still 9 cents off the high. Deese is down 3 cents to 4.85 even. Moving over to the beans. What are they doing for us? Well, they've come back a little bit. 17.75 cents lower now in July. 12.30 is last, about 4 cents off the low of the day, and about 24 cents, 24.5 cents off the high. Novi beans, they're down 9 cents. 12.10 is the price there. Moving over to the wheat. Chicago wheat's up 2 cents now, 6.99 trying to get that 7 handle back. We're 5.5 cents off the low of the day. We've got ways to go to the high though. We're about 21 cents off the high. How about Deese Chicago wheat? That's up 2 cents to 7.41 Let's look at the hard red in this Kansas City. 6 cents higher there in July. 7.27 is last. That's 5 cents off the low. And we're going to call that almost, say 19 cents off the highs. Deese sets up 4.25 cents to 7.57. That's hard red in Kansas City. Let's go over to the spring wheat, Minneapolis. 2.5 cents better bid there, and that's July. 7.55 is last, and that's going to be about what, 3 cents, 2.5 cents off the low of the day there. Well off the highs by about 12 cents too. So that's 2.5 cents better bid. Spring wheat, July. 7.55 is last. We have the Deese. 7.80 is last there, and that's up 3.5 cents on the day as well. Cotton. Well, we're still 166 points to the good. 82.18 is last. That's July. Deese trades at 79.13. That's up 112 points on its own there, too. So that's cotton. All right, let's bring him in. He's batting cleanup today. Mr. Ted Seifried, Zaner Ag Hedge. He's in Chicago. We're in Nashville. Ted, kind of an interesting day today. What are your thoughts?
Yeah, when I was sitting there over the weekend watching all the rain happen on the radar, I was wondering, are we going to be sharply higher on Tuesday, trading the rain that happened over the weekend, or are we going to be sharply lower on the forecast that we have going forward? And the answer was kind of both. I mean, we tried to go higher in the night session, especially corn, but then we sort of gave that up here as the day's gone on. Now, we have bounced off the lows, and that is in expectation of what planting progress is going to say here this afternoon. The expectation is that we're falling ever so slightly further behind, but at least the market feels today like it thinks we're going to get the rest of this crop planted. So, yeah, it's an outside reversal down day in both corn and beans. In beans it is. Corn, not quite yet. But it's not a good look on a chart after a 3-day holiday weekend. Going into, Wednesday, Thursday, Friday, if we don't have some friendly surprise and some bullish reaction for tomorrow, turnaround Wednesday, if you will, this is a scary time frame. This is a possibility of saying, hey, that bounce off the lows is over. Now that we are getting more and more planted and getting less and less worried, now we'll start to focus on the fact that there's a lot of subsoil moisture and we are set up for what could end up being a really very good crop as long as it's in the ground.
That's what I'm afraid of. I guess the way I phrased it is, what's going to be the new bullish story? What do you think it could be? I mean, that's the issue, right?
Well, demand, I guess. I think we're a long ways off about getting about hot and dry because, with all the subsoil moisture we have, I mean, drought monitors, best it's looked in a long time. So if that weather story happens again, it probably doesn't happen till August. So something in the meantime would have to happen from a demand standpoint. But I don't know what that would be. I guess that's the thing about predicting the future. You never really do know what that could be. But I'm not seeing anything, or I'm not seeing any potential for anything, at least not in the next couple of months or so.
Yeah, that's what I feel like, too. All right, stay right there. We're going to go away. We're going to pay some bills. We're going to come back and talk more with Ted Seifried, Zaner Ag Hedge. We're going to talk about livestock when we get back right after this. All right, welcome back. Let's talk about some livestock, right? You can't wear this jacket all day long and not really finish up with that. So we're going to finish strong with some live cattle boards. Let's look at that. Live cattle, this is where we've been all day. Steady a little bit better. June's up 72 cents. 184.42 is last. 20 cents off the high of the day. We've had about a $1.30 range. Does that kind of explain it to you there? Deese sets up 70 cents. 188.40 or 47 cents off the high of the day. And again, a similar range. So that's what's going on in live cattle. Moving over to the feeders. This is where we had the action, right? We're $4.12 better bid in August. 264.35 is last, 30 cents off the high of the day. And we've had over a $4 range there. So that's legit. Go out to the November. That's up $3.07. 265.27 and that's about what, 45 cents off the high of the day there, and we again another decent range. So feeders anywhere between say $3 and $4 higher across the board. And then finally we'll get to the lean hogs and get back to our guest analyst. They're steady a little bit easier, 47 cents lower up front in June to 93.80. Again, that's about what, 55 cents off of the low of the day, but we're not too far from the high either because we've had only about $1.10 range. We're 60 cents lower in the October to 82.40 there. So that's lean hogs. They didn't get the memo, but they're off anywhere between say 20 and 90 cents across the board there. Let's bring him back in, see what Ted Seifried's got to say about it. Ted, livestock, anything jump out at you there?
Well, you're right. The hogs did not get the memo, Scott, and maybe you should switch it up with a hogs coat every once in a while. But
Yeah, that would just be a regular coat then. Anyway.
Okay, so okay, cattle complex. You know, feeders are the leaders. Wow, it's a lot of strength in feeder cattle today, and they are just on a tear. That looks really good, but live cattle not following along, really, at least not as much as you would like to see. And that, I think, gives you a little bit of pause. Now, we are just right at, sort of the peak demand time frame. This last weekend was really, peak grilling season, the big shebang. We all get out there and do all that. And it kind of got hampered by a little bit of rain, I will say, in a lot of areas. And I think what we're doing now is we're kind of waiting to see what happens with box beef prices throughout the week, what happens on cash cattle trade, which likely won't develop till later in the week. And so live cattle futures are kind of taking a little bit of pause or restraint while the feeders just go do what they're doing. And that's, I think, a function of the chart, which looks really good. One thing on hogs, real quick before I know you got to go. When you have hog slaughter as strong as it was last week, and yet you have over the 5-year average, that's suggesting we got a lot of product up front, and that's been the main problem with that hogs market.
All right, perfect timing. You just wrapped my ear. Great stuff, super content as usual. Thank you very much, Ted. This is a synthetic Monday, and you did a good job opening up the week for us. That's it from Ted and Zaner in Chicago. Bring it back here to you, Tammy, and say it's glad to have you back on the desk.
Thank you so much. Good to be here. I love how you call it a synthetic Monday, something we had to make, right?
Well, it's because we had a fake
fake Monday.
Yeah.
So this is,
So sometimes we have fake
anyway,
Fridays.
It's a little short week. All right, thanks.